UPSC is not just a game of facts and concepts. It requires deeper understanding of every issue. US President Donald Trump has introduced an executive order banning central bank digital currencies. Internationalisation of Rupee. It's a very important topic. In fact, the most crucial topic in the current times, right? It is studied in parallel with the concept de-dollarization. Bilateral currency swap. What does that mean? So now there have been efforts to include Indian INR in this SDR basket. So why is it necessary? Hello my dear students, I am your Jyothi Ganesh and I welcome you all to my YouTube channel Joyful God. At this moment, a 75-year-old young guy is crying in a corner in the White House for not getting the Nobel Peace Prize. It is looking like the world has deceived him from getting the Nobel Peace Prize and he's been a crying baby. But we should commend his relentless efforts to get the Nobel across all the multilateral forums and through his social media posts with the help of all global leaders, the kind of efforts he had put. We feel sorry for him. But the point I'm making here is, if a 75-year-old guy who has done so much in his business career and who has also been second time president of USA, still could put so much of efforts to get what he wants, why don't you guys at your prime 20s couldn't put the required efforts relentlessly with utmost focus to get what you desire for? Isn't it? Yes. So it is the right time to channelize all your energies, to shift your gears, to amend your focus, to work towards what you desire for, and that is an UPSC rank. I welcome all of you once again to the one more economics current affairs discussion video, Easynomics, under which in our previous videos we have discussed the current affairs regarding economics from the period Jan to June 2025. As you all know, I have divided the topic into multiple subtopics. In our previous videos, we have discussed very important topics. In our first video, we touched upon GDP, GVA, and other growth-related aspects. And in our previous video, that is video number 2, we discussed most crucial aspects of it regarding inflation and monetary policy. And in the current video, we discuss current affairs issues regarding financial sector and digital payments. My dear students, in fact, I am getting mixed reviews. Some of the students are suggesting me to make short videos and some of them are enjoying the long videos. My dear students, UPSC is not just a game of facts and concepts. It requires deeper understanding of every issue. Take a look at this question that has been asked in 2025 mains examination, UPSC. Explain how fiscal health index can be used as a tool for assessing the fiscal performance of the states in India. In what way would it encourage the states to adopt prudent and sustainable fiscal policies? Can you see this? We have discussed fiscal health index in our previous video. I have not put this question just to match the context of a previous video, but the context here is just understanding FHI, just knowing who releases it is not good enough. You have to understand it in depth. You should analyze the indices report. You should also understand the applicability of the report. Then only you can write an excellent answer in the mains examination. My dear students, that is how current affairs is important. right? And one more question. What are the challenges before Indian economy when the world is moving away from free trade and multilateralism to protectionism and bilateralism? How can these challenges be met? Can you see this? Right? So that is why I'm telling you, unlike other current affairs of other subjects, economics current affairs plays a very, very important role. It requires a capability and skill of deeper analysis, not just concepts, not just data and facts, but analysis. Right? Economics is not only about wealth, it's also about welfare, it's also about geopolitics, it's also about sustainable development, it is also related to environment, it is also related to politics. So it is everything. So if you understand economics, you can understand the rest of the things. So by keeping this in focus, I am bringing you the current affairs analysis videos, not only with the facts, not only with the concepts, but deeper analysis of every current affairs. Hope it is going to help you. And I'm not just doing it for the sake of views and clicks. I am very well aware that short videos will attract more views and clicks, but these serious efforts are towards the most serious aspirants who are finding difficult to read economics and to analyze the economics current affairs. So if you are one among them, this current affairs series videos is for you. Yes, my dear students, I once again welcome all of you to my yet another current affairs economics discussion video for the period Jan to June 2025 under the program Easynomics. In the current topic, I'm going to discuss financial sector and digital payments topic. So, my dear students, I welcome all of you once again to my yet another current affairs economics discussion video under Easynomics for the period Jan to June 2025. So, in this video, I'm going to touch upon the topic financial sector and digital payments. Once again, a kind reminder, if you have not watched my previous current affairs discussion videos in my channel Joyful God, go back and watch them. They were regarding GDP and inflation, and which are very fundamental for your UPSC preparation. I have given a thorough and detailed analysis of every issue revolving around GDP and inflation. So again, in this video, I'm going to discuss financial sector and digital payment topic, under which I am going to cover various crucial topics, which includes digital payments, Internationalisation of Rupee, as well as RBI biannual report regarding payment systems, regarding how UPI is taking its growth, followed by credit reforms in India, as well as recent reforms brought by RBI regarding UPI, as well as recent reforms brought by RBI regarding gold loans, and various other issues. Shall we go through? So, CBDC, Central Bank Digital Currency. So, once the arrival of cryptocurrencies, the era of digital currencies had begun. So, when was the cryptocurrencies were introduced? In the year 2009. But they came into limelight only during the COVID times. So, that time saw the peak growth of investors in the cryptocurrency sector, and that alerted the central government as well as RBI. So, initially RBI was skeptical about cryptocurrency. I think even now it is. So, they brought a ban. They introduced a ban in the investment in cryptocurrency, but Supreme Court lifted it. So, now the cryptocurrencies are treated as assets, not as currencies in India. Right? So, the central government has introduced the transaction tax as well as income tax on the profits generated through cryptocurrencies. You all know that. If you want to know, let me know. I will make a new video regarding cryptocurrencies. But there is also one more idea flashed in the minds of many governments to introduce their own central government banked digital currencies. Right? That is CBDC. Why CBDC? My dear friends, you all know cryptocurrencies are not controlled by any bank or any government. They are decentralized, they are distributed, and they are anonymous. This character of anonymity and lack of control alerted many central government and central government banks because their economy can become unstable because of external factors. But there was an advantage brought by cryptocurrencies, that is seamless transaction across the borders and less, transaction cost. So all these qualities or features made the central banks to introduce their own digital currencies, that is CBDC. So many countries have done their pilot project, especially China, right? So India is also following the track. So we'll discuss that. But why this in the news now? US President Donald Trump has introduced an executive order banning central bank digital currencies. What he said, dollar-backed stable coins can act as alternatives for CBDCs and there is no need for CBDCs. So, all the countries are moving ahead with CBDCs, but USA is reluctant. So, what can be the reasons? One is privacy concern. So, once the digital currencies have been introduced, central government and the central bank, that is federal bank, will have all the records of money transactions. They can even track in which wallet how much money is there. Can you imagine? The bank will know or the government will know how much money is there in your pocket or in wallet. Isn't it dangerous? Right? So that is what Trump is saying. It reduces the privacy. It threatens the privacy of every individual because government and federal banks will have extraordinary power to track every money. Central control risk. Giving excessive power to the Federal Reserve and reducing individual financial freedom. Right? Financial stability issues. Risk that people might withdraw money from banks if everything is converted into digital currency. So there can be a case that the banks may run out of physical currency. Right? So banks will lose control on financial sector or money market. So that can open up the Pandora's box. Right? That is one more concern. Preferences for private innovation. So right from the days of his campaign, Trump was supporting cryptocurrencies. Right? So why cryptocurrencies? Cryptocurrencies are also digital currencies. They are backed by innovation and technology. Right? They are backed by an application. So cryptocurrencies will lead to innovations in the private sector. So that is why Trump says, if CBDCs are introduced, it may hamper the growth of cryptocurrencies. That is one more concern. One more threat is dollar sovereignty. Right? It may threaten the dollar sovereignty. Sovereignty means freedom, liberty. Right? So government can control. For example, let's say you have some digital currency in your wallet. Okay. Let's say $10,000. And you want to spend that money, to fund, a Democratic Party. Currently, the Republic Party is in power. So you want to fund it to the Democratic Party. But the federal government or a federal bank, if it restricts the funding, it can restrict, right? If you have physical currency, you can go and donate to wherever you want to donate. But the digital currency is based on transactions. I'm just giving a hypothetical example. Right? So the government can control the flow of money. It may lead to politicization of economy. Government can control where and how you can spend money and how much you can spend money. So your money is not your own. Right? You don't alone control your money, but also by the federal bank as well as government. So that threatens the sovereignty of dollar. Ideological stand. Right. Banning CBDC reflects conservative belief in limiting government's role in financial systems. Government must have a less role. Even India, we are saying that government must be facilitator, not the regulator. Right? So if government holds more control in the economy, it leads to lesser private participation and innovation. So these are the reasons Trump has given in banning the CBDC. Right? So these you can write as cons against CBDC. Right. So going to the basics, there are many types of digital currencies. The era of digital currencies began with cryptocurrencies. So I don't go in detail of scientific or technological part of cryptocurrencies. But cryptocurrency is a digital currency. Cryptic means which cannot be easily understood, right? So it is stored as a cryptic code in distributed systems. Distributed systems. It is not that one central server holds all the information. Distributed systems will hold the information regarding cryptocurrencies. What kind of information? Information of transactions, information of ownership, right? All these are recorded, right? How? What kind of data structure? Data structure means a container, right? You can imagine these distributed systems as, cupboards, right? And in that there are so many files, and files, to keep the files we use boxes, right? So imagine set of boxes stored in individual cupboards. So these boxes are called data structures. So what kind of data structure they use? Blockchain. So blockchain technology, this is a technology they use to store the information regarding the ownership as well as transaction, right? So every transaction will be recorded in this blockchain nodes. There are nodes. There are nodes connected. If there is one more transaction, one more node is added. One more transaction, one more node is added. Every node will include certain information regarding digital currency transactions as well as ownership, right? So I don't stress more upon this because it will take more time, but you just have to know that there is underlying technology called blockchain technology. This information of blockchain is stored in set of distributed computers. You can also store the information. It is available in the public, right? So for example, if you want to mine, I am using the word mining. Just like you mine the mineral ores, you also can mine digital currencies. What is crypto mining? If you want to know, if you want me to explain, comment it. I will make one more video to explain how and what is the meaning of cryptocurrency mining, right? So our computers can become individual distributed servers to store this blockchain nodes, so that there is no chance of losing the data. There is no chance of corrupting the data, and all the digital transactions can be recorded transparently, right? There is very less or no chance of data theft. So that is the underlying aspect of cryptocurrency or blockchain technology. But every cryptocurrency is backed by some or the other applications, right? So you can dig more upon that. There are many cryptocurrencies like Ethereum, Bitcoin. Bitcoin was the supreme. It was introduced in the first. Satoshi Nakamoto, I mean, nobody knows who is he, but there is a name circulating around the globe that he is the founder or he is the proponent of cryptocurrencies. Okay. So there are many cryptocurrencies. They have underlying technology, underlying application. How strong? So the value of the cryptocurrency depends on how strong the underlying application is, right? So I will not dig more upon that. So what are the nature of cryptocurrency? They are decentralized because no government controls it or no central bank controls it. They are based on blockchain and they are stored in that cryptic language or cryptic form, cryptic data. It is very difficult to understand. So no central authority will control them. Value, highly volatile. So if you have any cryptocurrency trading apps, if you currently if you check the price, it can be some value, and after a week you come and check, the value can become 20% more, 20% less. They are highly volatile because the cryptocurrency are still in the nascent stage, right? So there can be a volatility driven by demand and supply. How much they are available. Based on the availability, the value can increase or decrease. So there are so many cryptocurrencies, Bitcoin, Ethereum, and then there are so many like Sonata, Solano, and there are so many like Dogecoin, which was promoted by the great Elon Musk, etc. There are so many cryptocurrencies. So what are the issues? They are not legal tender. So you cannot go to a shop and ask them to accept cryptocurrency as the mode of payment because they are not legal tender. But there are some countries, they have made cryptocurrency legal tenders. Which are they? Comment below. There rises concerns of speculation. Speculation means what? let's say one guy, one promoter. So what happens in speculation? One promoter, spreads the news saying that, this particular crypto coin is going to explode. Overnight, the value of the currency is, will become 20 times, 30 times. Speculation. So the followers fall for this news. They will come and invest in huge amount. But this guy who promoted the coin would have been already an investor in the coin. So once he gets, decent sum of profit, he will exit the coin. But these people who have believed the news, they have started to invest more and more. But the news is a hoax. It's a false news. So suddenly the news spreads that this celebrity who promoted it is not a real guy, or the news is not real. And suddenly the fear spreads. That is also a speculation. So suddenly people start withdrawing the money and they encounter huge amount of loss. So it's all about speculations, right? People may speculate. So the speculation happen in every field. For example, gold, when the marriage times comes, people speculate that the price is going to go very high. So people start buying, before it goes, beyond 1 lakh, 2 lakh, we'll start buying. So once it reaches some peak, people start spreading the news, no, it will come down now. It is done now. So people stop buying it, right? So that will reduce the gold price. So that is speculation. So we can see speculation in every sector, right? But cryptocurrencies are more volatile for those speculations, right? That is a concern. So cryptocurrencies, under cryptocurrencies, we have something called stable coins. So stable coins, what is the meaning of stable coins? So they are also cryptocurrencies. They are also cryptocurrencies. But what is the difference? They are not used for transactions. I mean to say, they are not used as, stocks. They are not used for profit making. Their value will not change. The word stable means their value will remain same, right? It won't fluctuate. So you can, consider that as, cash in your pocket. The value of the cash will not go down or go up. 500 rupee will always remain 500 rupee. But using the 500 rupees, you can buy gold, or you can buy something else, or petrol. So the petrol and gold, the value will be fluctuating, but the price, the note that you have in your pocket will not, the value will not go down or up, right? So similarly, stable coins also play the same role. If you want to buy a cryptocurrency, first, let's say if you have rupees in your pocket, in your wallet, so you cannot buy cryptocurrency directly from rupee. First, you transfer it to a cryptocurrency wallet. In that, it will be converted into a stable coin. We have USDC and USDT. These are two stable coins available. So it will be converted into either of them. For example, let's say you have transferred, let's say 1,800 rupees. 1,800 rupees you transferred, right? So it will be converted to 20 USDC or 20 USDT, because roughly I'm taking 90 rupees as $1. So these stable coins are used to buy crypto assets. Let's say Bitcoin or Ethereum or any other. So did you understand the role of stable coins? Right. So this is what Trump said. These stable coins can act or play the role of CBDC. So there is no need of central government bank CBDC. So coming back to the stable coins, so they don't fluctuate. They are not backed by technology or application, but so they are backed by fiat currency and commodities. For example, a company which owns USDC, let's say it has, some $50 million of USDC. It also has to have equal amount of commodity in terms of maybe gold or fiat currency or maybe US dollar. It has to have equal amount of commodities to back the value of stable coin that it possesses. Are you understanding? So you can ask me like, sir, I converted 1,800 rupees into USDC, 20 USDC or 20 USDT. So how will I believe the value of USDC or USDT remains same. So what guarantees the value of stable coin? What guarantees? The commodity or assets owned by the company which operates these stable coins, right? So if they have printed or if they have mined, let's say $50 million worth of stable coins, they should also keep $50 million worth of commodities with them. Commodities meaning gold or dollar. Got it? So that is the role of stable coins. So that's how stable coins are different from other cryptocurrencies. Okay. All right. So what is the use? Quick settlement in crypto markets. Okay. Settlement means, transactions in the crypto market, right? Example, USDT, USDC, right? Again, same issue, transparency of reserves. So if the company owns a stable coin, but how much the reserve that it has, does it have equal amount of backing with respect to commodity reserves to match USDC value? So again, that's a transparency issue. But if the central government owns it, then it can become a, you can trust, it will be credible. So there are one more type of digital currency, that is CBDC. Just now we discussed central bank digital currencies. So what does it solve? It solves the problem of anonymity. See, if you own Bitcoin, if you own Ethereum, nobody knows who owns them. Nobody knows that so-and-so guy living in so-and-so place owns this much. But it has an address, that is hash code. Hash code. Central governments or banks cannot understand the hash code. Are you understanding? If you have a wallet, it has some 10 Bitcoins, 10 Ethereum, right? This will have a hash code, unique hash code. This will have a hash code. This hash code means it is a set of string of alphanumeric characters, okay? This hash code can be understood only by blockchain technology, but not by any central government or central bank. So, cryptocurrency has the problem of anonymity, right? Governments will not get to know how much owned by the person. I mean, who owns how much, right? So, this CBDC solves this problem. Because government will know, once they launch CBDC, central bank would know which person holds how much of digital currency. Next problem it also is problem of regulation. Regulation of value, regulation of usage, regulation of transactions, all that. So, all that can be regulated by central bank. It also, including this, we call it transparency and control. So, that will come to the hand in the hand of central government. And it will also take care of economic stability or financial stability, right? So, there was a concern that if cryptocurrency becomes a legal tender or people start accepting cryptocurrency, then the value of Indian rupee or domestic currencies may go down. People may get attracted towards cryptocurrency. They may convert all the Indian rupee into some of the cryptocurrency, and they can start transacting through the cryptocurrency itself. So that will take away all the control on the money market from the central government, right? So that is a concern. So the CBDC will solve that problem. First of all, what is CBDC? Again, it's a digital currency. No change in that. It's a digital currency. The currency stored in the form of digital code. Right? But it is governed, regulated by the central government. Right? So they are not based on speculation. Right? So they are not distributed in the nodes just like cryptocurrency. The discussion is still going on whether the governments need to use blockchain technology or some other technology. Right? So if it uses blockchain technology, then the data will be stored in individual repositories of distributed systems in the blockchain nodes. Again, it is still a nascent stage. So based on the applications, the government can adopt the kind of technology they have to use. So what is the nature of CBDC? They are centralized, they are sovereign digital version of fiat money. sovereign digital version of fiat money. Means what? Means, let's say a 100 rupee note is printed. It is signed by governor of the central government. It is signed by the governor of RBI. That means what? If you go and take the note and give it to the RBI has to give the equal amount of good, the equality of good, maybe in terms of gold or something. It is backed by RBI, right? So it is the promise given by RBI that this note carries this much of value. And people have to respect it. People have to accept it because it is backed by the government. Similarly, CBDCs, they act as a legal tender. They act as a replacement or alternative to the fiat money because they are backed by RBI. Got it? So, who is the issuer? Country's central bank. They act as a legal tender. So, there are two forms. CBDCs are introduced in two forms, wholesale CBDC and retail CBDC. Wholesale CBDC for interbank transactions, interbank settlements of money. Retail CBDC is for public use, right? So, example is RBI's digital rupee or e-Rupee, right? So, benefit again, they are secure because they are backed by central government. Programmable payments. What is the meaning of programmable payments? Programmable payments. So, now many governments are giving free money, right? Monthly, like Kisan Samman Yojana or in Karnataka Griha Lakshmi Yojana, etc. And many other state governments are replicating this model. They are sending some monthly 2K, 3K to women or to farmers, etc. So imagine tomorrow if the government decides that the money transfer will happen in the format of digital currency. CBDC, every person has to open the digital wallet. Government will transfer the money in terms of digital currency. So you got the 3,000 rupees or 4,000 rupees worth of digital currency in your wallet. Government will still hold the control on your money, right? It can program the payments in such a way that the money can be spent only in the grocery shop or in the vegetable shop or in required shops where it will fulfill your basic needs. You cannot go back, take the money and buy crackers. You cannot take the money and buy, some liquor or something. And for example, in that case, let's say if the government gives a student loan in terms of digital currency, you take the student loan and, you cannot just go and buy a bike or something. You cannot just fund your house construction or something, right? So government can program the usage of the currency for what purpose it should be used. That is called programmable payments. So that is the advantage of CBDC. It enhances the financial inclusion, right? So more people come in the net of banking sector. More people start using the banking services. So that is about financial inclusion. That's about CBDC. So as I told you, types of CBDC, wholesale CBDC and retail CBDC. So I will not go in detail much about that. As I told you, interbank settlements is for wholesale CBDC and retail, general public, it is for, retail CBDC. In the retail CBDC, we have two types, token-based model and account-based model. Again, I don't think it is necessary to go in depth to understand what are the difference between token-based and account-based, but you should know that. So they may ask in prelims, token-based model, account-based model were discussed, frequently in the, recent times, which are pertaining to what? So again, there can be a potential question. So token-based and account-based model, that is the model of whole retail CBDC. Okay, I don't want to go in depth regarding both of them. So Indian digital rupee, again, Indian CBDC. So some facts, they are issued and regulated by RBI under RBI Act of 1934, Section 26. So no need to remember section and all, but just remember the Act, okay? Because they are legalized, they are legal tender, they are backed by legislation, right? So denominations are same as physical currency, just like physical 1 rupee, 2 rupee, 5 rupee, 10 rupee, whatever it is. So all those denominations available in CBDC. So currently, so if you ask me, sir, can I go and take a CBDC? Yes, you can take, but there are conditions apply only through 15 banks allowed by RBI and certain selected locations only. So the project is still in the pilot mode. Pilot mode means, so they're trialing, they're testing it, the efficiency of CBDC, the usability and workability of CBDC. So it is still in the pilot mode. The two versions, yeah. So use cases and benefits. Why India endorses? So just now we discussed that why USA is banning or has banned CBDC, but in the same time, India is endorsing CBDC. So what are the reasons? Financial inclusion, very important thing, right? Majority of the population, especially in the rural areas, fall outside the purview of, central bank or government. Most of our economy is informal in nature. So it is very important to bring all of them under the net of financial inclusion, right? So that is one use case. Second is reduced transaction cost. So to transfer the money, let's say government infused certain amount of money to make it available for, small and medium scale enterprises, right? So for that to happen, government has instituted, CDB Bank. CDB Bank infuses money into the commercial banks. Commercial banks gives away loans to the deserving applicants. Can you see the flow of money? So under all these stages, there is a transaction cost involved. But by CBDC, this transaction cost can be minimized. Government can directly interact with the end consumer, right? Bypassing all this middlemen, right? So reducing all the transaction cost. That's about second use case. Third is programmable payments. I told you earlier, right? If the government gives the subsidies or money for any sake, government can program it for what purpose they can be used. For example, if you have observed the Sodexo coupons, do you know Sodexo coupons? So mostly in the companies, corporate companies, they give for the employees for buying something. So these Sodexo coupons are accepted only in certain stores for certain purposes. You cannot go to a pub and give Sodexo coupon and have some drink and come. No. Because those kind of payments are programmed. Similarly, CBDs also can be programmed. Okay. Improved monetary policy. That means direct stimulus distribution. As I told you, if the government stimulus means what? Infusing more money into the money market or infusing more money into the circulation. Stimulus, right? If the government, let's say, Atmanirbhar package of worth of 20 lakh crore it introduced by government aftermath of COVID, right? So if it has to give money to farmers, to small scale industries, or to daily wage laborers, right? Government can do it directly. Got it? So that will improve the better transmission of monetary policy. Got it? Cross-border efficiency, right? If the money has to be settled between two different residents like Indian, Singapore, Malaysia, Philippines, etc., for the business purposes or for any other personal, transactions, CBDCs can be easily used, right? With less transaction cost and less time, right? That will also lead to internationalization of rupee, right? Non-residents or foreigners also can use INR to settle their payments, right? Rupee settlements are possible directly between India and partner nations bypassing USD. So I will discuss more about this in the rupee international topic, which we are discussing shortly. The reduced cash dependence, again, RBI has to spend a lot of money to print the cash, and many times notes become wasted. It is called soiled notes. Printing, money is lost or money is spent during printing, and money is lost due to soiled notes or replacing the soiled notes. So all this can be avoided by CBDC. So currently, there is nearly 33 lakh crore worth of cash is in circulation. So, you all know that if there is more cash, then more informal nature of economy and lack of transparency and all those things, right? So again, demonetization has done the least to control the cash flow in the economy. In fact, the cash flow has increased aftermath of demonetization. So that is one thing. So currently there is nearly 33 lakh crore worth of currencies in circulation. It is around nearly 12% of the GDP. Combat financial crime and improve transparency. So cryptocurrencies are blamed to settle international payments for the sake of human trafficking, drugs trafficking, arms trafficking, because of the nature of their opaqueness. But CBDCs can solve the problem because government can track the flow of money and the ownership of money. So it will also help us to combat financial crime and it will improve transparency, right? That will control the counterfeit currency, because the physical currency can be counterfeited, digital currencies are not. Money laundering, you know what is money laundering? If you don't know, ask me, comment below, I will make a video. Tax evasion, right? People are earning so much of money, they will show it as agricultural income, but it is not so. But in CBDC, it all can be controlled, it all can be tracked, so people can no more evade the taxes. And global financial technological competency. Many countries are trialing their pilot projects in CBDC. Nearly 100 countries. So India, being the leader in the digital economy, being the leader in the financial sector, India cannot lag behind. So India is also taking CBDC very seriously to improve the digital economical factor as well as to improve the efficiency in the financial transactions, right? China is also taking steps to adopt CBDCs. So India is also following in the race, giving more importance to the innovation and digital economy. So that is the reason India is pushing towards CBDC. So what are the challenges? Cyber security risk. People may hack. So if you keep the money in your wallet, keep the wallet in your pocket inside your trouser, and always guarding it, at least can save your money. But digital money kept in the wallet, your digital money is connected to the internet, people sitting somewhere across the borders can get access to your wallet, can hack your digital currency. So still there is a threat. Unless there are enough cyber security measures as well as cyber security awareness has been created, CBDC poses huge risk. Privacy concerns. So do you like if government monitors every spending of yours? Right? Currently all your life is being public. There is privacy is a myth, Whatever you do, you eat, you go, you buy, you spend, everything is online. Every corporate companies or commercial companies are tracking what you're doing. On top of that, if the government also tracks every money that you're spending, will you like it? Won't it creates a cause of concern? Right? If the government becomes authoritarian, right, we become like China in terms of authority, not in terms of development. So that's a threat. Privacy concerns. So I have added one more point here. Zero knowledge proofs can be asked in your prelims. It can be economics question or it can be a science and tech question. Zero knowledge proof is a technology or it's a technique suggested as part of CBDC as a solution for privacy concerns. So if the government uses this technology, they may still track the ownership, but they may not track the transactions, or they may not track exact identity of a person. Under this technology, the central government can still track the transactions, but they may not have to exactly narrow it down to a person. So still the transactions will be transparent, but cannot be tracked on individual basis. So there is one technology called zero knowledge proof. Can be asked, what is ZKP? So you don't have to know what is ZKP, how it works and all, just know the name, that's all. Cross-border coordination is also a challenge because technology used by China for its CBDC or technology used by USA or any other country for their CBDC and technology used by India, right, may not be compatible with each other. It requires a global uniform standards for cross-national transactions. So given that there can be different technologies, the compatibility can be an issue. Digital divide. In India, digital literacy is very, very low. People are still learning to understand what is UPI ID, how to do the internet banking. Many in the rural areas don't even know how to operate an ATM machine. That is the kind of digital literacy we're having in. On top of that, if you bring in digital currency, the advantage is taken only by certain educated section, urban section, and they will progress, they will grow, but the people who do not have digital literacy, they will fall behind. So the poverty gap, relative poverty gap will increase due to digital divide. That's a concern. Monetary sovereignty risks. For example, if cross-border transactions can be done very easily, people can adopt cross-national currencies than Indian currency. People may start using other countries' currencies. Right? If the currencies can be easily transacted, freely transacted across the borders, there is a risk of people adopting different national currencies than Indian currency. Right? Preference for foreign CBDCs could undermine domestic currency. So these are the regulatory challenges. Right? So global context, I told you, China is in the pilot mode. European Union is exploring digital euro, but the US is coming out of the race. It is banning the CBDC. IMF, International Monetary Fund, BIS, Bank for International Settlements under IMF, that is International Monetary Fund, is working on global standards and interoperability. How digital currencies can operate each other, right? For that, we need a global standards, right? So this is the progress happening globally. Adoption of CBDC, it is going in a relatively lesser pace because India is still piloting the project, right? It is still trialing and erroring the project. So launch has happened 3 years ago, but the circulation currently 1,016 crore rupees, which is very, very low. But around 6 million users are currently using the CBDCs. It is at a very, very, very nascent stage. It takes many days, many years to understand real application of CBDC and real value of CBDC in terms of economic growth and financial inclusion. So, dear friends, that's about CBDC. Now, let us move on to the topic internationalization of rupee. It's a very important topic. In fact, the most crucial topic in the current times, right? It is studied in parallel with the concept de-dollarization. Many countries, especially BRICS nations, including India, Russia, China, Brazil, and South Africa, they are planning to move away from dollar. Right? So, by how? By increasing the visibility of their domestic currencies. So, that is what we call internationalization. It refers to the process of using INR to settle cross-border transactions. If you export something, let us take the money in INR. Right? If you import something, let us pay the money in INR. Right? So, it depends on mutual understanding between the countries which involve in trade. Right? So, what is internationalization of rupee? It refers to the process of increasing the use of Indian rupee in cross-border transactions. Right? So, it will reduce the dependency on the third currency. If India and Japan are involved in trade, the trade settlement happens either in INR or in Japanese yen. It will avoid the use of intermediate currency, that is US dollar. Right. So, it also means making INR a global reserve and settlement currency. Global reserve. So, to promote INR as a global reserve. So, every country possesses certain forex reserves. Right. It includes many prominent currencies like US dollar, Japanese yen, Chinese renminbi, and British pounds, European euro. Right. So, likewise, we are putting all the efforts which are necessary to make Indian INR as a global reserve currency. Right. So, under internationalization, we study few initiatives taken by Indian government and RBI. Right. These are recent initiatives. Very important one is FEMA regulation changes. What is FEMA? Foreign Exchange Management Act has been amended recently in the year 24-25. Let us throw some light on the background of this FEMA Act. The FEMA Act has been introduced in the year 1999. So this FEMA Act replaced FERA Act, Foreign Exchange Regulation Act. So these changes happened in the era of LPG reforms, that is in 1991. So what was FERA? FERA was a draconian law, right? So it imposed many restrictions for feasible or seamless foreign exchange, right? So for example, if someone violated the FERA Act, it was treated as a criminal offense and there were serious punishment imposed, and it was more of a protectionist in nature. right? Every violations were treated with presumption of guilt, right? The burden was on the violator to prove that he was not guilty. So during the LPG reforms, we opened up our economy for foreign investments. So in that time, FEMA Act was introduced. So government, from becoming a regulator, it became a facilitator, right? So that was the historical background of FEMA Act. Let us move on. The recent regulation changes that has been brought as part of FEMA Act. What are they? First one being INR accounts abroad. What does that mean? Non-residents can open INR accounts in overseas branches of authorized dealer banks to settle current and capital account transactions between Indian residents. So let us say there is a non-resident residing in, for example, Japan. So there is Indian resident residing in India. So they have some trade. For example, this guy is exporting certain pharmaceutical products to Japan. This Japanese guy has to pay him in INR. So earlier what used to happen? There is a Japanese bank. Used to accept the money in N. Right. So it used to open up SVRA account in India, in an Indian bank, let's say SBI. Right. So in that SVRA bank, the Japanese yen used to get converted into INR. Special Austro Rupee account. SVRA means Special Austro Rupee account. Right. From this SVRA account of a Japanese bank, which is opened up in Indian bank in India, so this INR used to get converted, this INR used to get transferred into this exporter's bank account in INR. This is exporter's bank account. This was the earlier process. Now with the new regulations, this non-resident guy can open an INR account in Japan itself. There is no need of transactions going through an SVRA account. Right? There is right. So there are designated authorized dealer banks which are allowed to open INR accounts in foreign soil. Let's say if SBI is an authorized dealer bank, right, it is authorized to open an INR account in foreign land. So now what happens? This non-resident guy who has a trade to do with India, he does not go to a Japanese bank, and the Japanese bank does not have to go to the SVRA account to credit the INR into a Indian resident. So what will happen now? This non-resident guy will directly go to this INR account opened up in a foreign country by an authorized dealer bank. So this INR account accept the Japanese yen, it converts the yen into INR to that existing or prevailing exchange rate. Now this INR money will come back directly to the Indian resident's INR account. Got it? So now new regulations allows an Indian authorized dealer bank to open an INR account in the foreign soil so that the non-resident Indians can operate. So this will increase the visibility of INR in the global trade. Are you getting it? So that is one regulatory change that has been introduced as per new FEMA regulations, right? Moving on. Now, non-resident transactions. What does that mean? Balances in repatriable INR accounts, SNRR, SVRA, two kinds of INR accounts. I will talk about that. can now be used to settle transactions between non-residents. So let us discuss about what is the meaning of repatriable INR account or SNRR and SVRA. Right. First, let us talk about what is the meaning of repatriable. Repatriable means the money that can be transferred from India to foreign country. The money that is to be allowed. The money that is allowed to be transferred from India to foreign country. Right? So it is not that all the money a foreigner or a non-resident earns in India can be transferred, to the foreign country. There are some restrictions. So that money is divided as repatriable and non-repatriable. Right? So what is the meaning of non-repatriable? For example, let's say the money, for example, a non-resident, right, owns a plot in India, right? The plot generates certain amount of rent. That rent has to be deposited as non-resident ordinary account, NRO account. So this money cannot be repatriated entirely. There is a limit of $1 million. I'm just giving an example. Likewise, there are certain earnings which are not allowed to transfer entirely to the foreign country, but there are restrictions. Right? More than this $1 million is non-repatriable. Got it? So whatever the repatriable INR are deposited into two kinds of accounts, SVRA account and SNRR account. Right? SVRA means what? Special Austro Rupee account. SNRR means Special Non-Resident Rupee account. SVRA means Special Austro Rupee account. SNRR means Special Non-Resident Rupee account. So let us discuss about what is the meaning of Austro account. Austro account means any non-resident person can open an account, an INR account in India. Right? So this non-resident person does not directly come and open an account. He will open an account through a foreign bank. A foreign bank account related to the non-resident. That bank in turn open an account in INR in Indian soil. Got it? So a foreign bank opening an INR account in India. Let's say this INR account is with SBI. So this is called Austro account. Are you getting it? A foreign bank opening up an INR account in India, in an Indian bank. It is called Austro account. Got it? So what is Special Austro Rupee account? This Special Austro Rupee account is meant depositing INR for trade related purposes. So this INR deposited in SVRA account can be used only for trade related purposes. So they are mainly opened by businesses, right? Export and import businesses. That is about SVRA. SNRR, Special Non-Resident Rupee account, whatever the INR deposited here is not only for trade purpose but other business, external commercial borrowings, dividends, etc. For all these purposes, SNRR will be opened. So there are two kinds of Austro accounts, SVRA and SNRR. Got it? So now let us come back to the point. It says balances in repatriable INR accounts can now be used to settle transactions between non-residents. Meaning what? Let us say there is an SVRA account of a person 1. There are two persons. So this person is from, let's say, Japan. This person is belong to UAE. Okay. Let us say this person is an investor. This person is a trader. Both of them have INRs in their SVRA account. Got it? Now, this UAE trader requires INR to do business with India because he has to pay for imports from India. So that is why he is keeping balance in INR. This Japanese guy need to invest in India, that is why he is keeping INR. Let us say this Japanese guy has to buy something from this UAE trader. Let us say this Japanese investor has to buy something from this UAE trader. Now, he can settle the money in INR. Are you getting it? He can directly pay in INR. This guy needs INR to pay for the imports from India. This guy needs INR to invest in India. That is why both of them are keeping an SVRA account individually. Now, if there is a trade happening between these people, they can settle their trade money in INR. Are you getting it? So that is the meaning of this point. That is the meaning of this point. Balances in repatriable INR accounts can now be used to settle transactions between non-residents. What problem does it solve? It will reduce the transaction cost. It will reduce the volatility in the forex market. Okay, these are some benefits. Now, third regulation, foreign investment means what? Balances in INR accounts can be invested in permitted assets abroad. Balances in the INR accounts can be invested in permitted assets abroad. Let's say there are two kinds of INR accounts, one opened in foreign soil and one opened in India. This is called SVRA account or SNRR account. Got it? So, in the foreign soil, an Indian authorized dealer bank will open an INR account, right? Now, as per the new FEMA rules, whatever the INR present here in the Indian Ostro accounts as well as INR accounts abroad, these INRs can be invested in the permitted foreign assets. Got it? If there is a friendly country which accepts INR, right? So these guys who owns an INR account either in India or in foreign soil, they can take this INR and invest in the permitted foreign assets. For example, let's say treasury bills, right? Sovereign bonds. So they can go and invest this INR. So what will happen? INR will achieve more global presence. Right? That is the reason. That's about the third point. And the next one is exporter accounts. Now, Indian exporter may open foreign currency accounts overseas to receive export proceeds and use them for imports. Got it? So now Indian exporter, right? So he has to be paid in the foreign currency, right? So he can open a foreign currency account abroad. Right? He can use the same foreign currency to pay for his imports. Understand? So if the Reliance, so it has to import the crude petroleum oil from UAE. It has to import some crude petroleum oil from UAE. Similarly, it has to export the refined petroleum to UAE. Right? So for its exports, right, it will be paid in foreign currency, right? So that's about dirham. Now the Reliance can open a foreign currency account in UAE, right? So from this dirham, it can directly pay for those people who are exporting the crude oil to Reliance. So Reliance can pay for its imports from the same foreign currency account. So here it will reduce the exchange, cost. Understand? So these are new FEMA regulations have been introduced. What is the purpose of this? Internationalization of Rupee. Understood? There are certain other key measures as we discussed earlier. SVRA, special Ostro Rupee accounts. So they are introduced by RBI. What is an Ostro account? We discussed an account a foreign bank holds in Indian bank in INR. That's called Ostro account. Right? So SVRA mechanism announced by RBI in July 22 allows international trade to be settled in INR rather than in USD or Euro. It has allowed 22 countries to open SVRA account in INR. right? It's about special Vostro rupee account. Got it? What does it do? It reduces the need for USD, that is third currency. We don't have to look for USD. So our trade will not be exposed to US dollar. So in that way, our trade can be independent of US dollar, right? So it lowers the risk of forex market. So there can be volatility in the forex prices. It will lower the risk. It will also lower the transaction cost. Okay. So there is one more mechanism that is called bilateral currency swap and local currency settlement. Bilateral currency swap. What does that mean? Let us say Japan and India, right? So they have partnered or they have signed an MOU for currency swap worth of $75 billion, right? So under this agreement, if India requires Japanese yen, they do not have to go through USD. They can directly approach Japanese bank. They have a mutually agreed upon exchange rate, right? As per this exchange rate, Japanese bank will give us yen. For example, if an Indian exporter or importer requires Japanese yen, right? It doesn't have to go to a forex market. In forex market, what happens? People have to exchange that with Indian currency with USD. They have to buy USD and they have to sell USD to buy Japanese yen to pay for their imports, right? To reduce the third party currency dependence on third party currency, this currency exchange agreements are signed or currency swap agreements are signed. Got it? So now the Japanese yen and INR can be exchanged with a mutually agreed exchange rate, right? So it will reduce the delay in the trade settlement. It will reduce the dependency on third currency. It will reduce the exchange rate volatility. Also, it will reduce the transaction cost. Very important. Okay, this is called currency swap agreement. Okay. So now, central banks agree to exchange local currencies to stabilize markets and reduce forex dependence. So there are many countries with which India signed MOU, UAE, Indonesia, Maldives, to encourage cross-border local currency transactions. There is also India, Indonesia MOU, local currency settlement system. Whatever the trade happens between India and Indonesia, the currency will be transacted in dirham and INR. In dirham and INR. For example, let's say if there is an exporter, or I'm sorry, there is an importer, right, sitting in Indonesia. So there is an exporter sitting in India. This guy has to pay. This guy will pay, rupiah. This guy will pay in rupiah to Indonesian bank. As per the currency, local currency settlement agreement, this Indonesian bank will take the rupiah, will pay in INR to Indian exporter. So there is no involvement of third party currency. Understood? It's called local currency settlement system. Right. So again, advantages: cuts the transaction cost, bypasses exchange rate volatility, strengthens financial sovereignty. So these are very important, crucial, conceptual things, right, which are pertaining to internationalization of rupee. So there can be a analytical type of question in prelims, right? So this I am explaining because these terminologies you may come across again and again in your editorials, right? They can be even asked in your mains examination, but they are a little bit tricky to understand. So that is the reason I am putting all the efforts to make you understand in a simple way. If you still have any doubts, any concerns, kindly drop your comment in the comment section. I will make all the efforts to resolve them. Moving ahead, there are efforts undergoing for inclusion of Indian rupee in IMF SDR basket. SDR means what? Special drawing rights. Right. It is SDR is conceptualized by IMF as a global asset, right, to complement the forex currencies. For example, every country holds forex reserves in terms of USD, Japanese yen, euro, etc. Right? Similarly, they can even hold SDR, special drawing rights. So these SDRs have to be accepted by those countries which are with IMF. Right? Just like they accept USD, SDRs also should be accepted. So that is why SDRs are conceptualized to become a global reserve assets. So how the value of SDR has been calculated? Depending on the basket of currencies. These are the basket of currencies. Proportionately, the values have been calculated and then added up to come up with the value of SDR. Right? Some percent of USD, right? Some percent of euro, some percent of renminbi and Japanese yen and Euro and British pound. So remember, these are the currencies including the SDR basket. So based on the value of these currencies, SDR value will be decided. This can be a prelims question. So Chinese renminbi is the recent addition to the SDR basket. So now there have been efforts to include Indian INR in this SDR basket. So why is it necessary? Because it will increase rupee's credibility as a global reserve currency. Right? It will also boost investors' confidence, and there will be an increased demand in INR. There is an increased demand for INR. It will appreciate INR's value. Right? So these are the advantages of including INR into SDR baskets. Right? So this is the constituents of SDR basket. Can you see this? So the value of SDR has been calculated by multiplying the value of USD with 43%. That is USD, the weightage of USD in SDR's value is 43%. The weightage of European Euro in the SDR basket is nearly 30%, followed by Chinese yuan or renminbi, followed by Japanese yen and Britain's pound. So these are the currency included in SDR basket. Now there are efforts have been put to include India's INR into SDR baskets. And other supporting measures. For what? For internationalization of Indian rupee. So what are they? Allowing INR accounts abroad, INR denominated loans to non-residents. We discussed about allowing INR accounts abroad. So RBI is also allowing INR denominated loans to non-residents. For example, if a Japanese investor has to come to India, right, he has to obviously invest in INR. But if he needs loan, banks can lend this non-resident in INR. Got it? Now, there is also a push for Indian government bonds in global bond indices. There is something called global bond index. Right? You can read it as similar to our Nifty, Sensex. Right? So all these are indices, right? They constitute topmost companies' stock value. Right? So by looking at these indices, you can understand how the topmost companies are performing in stock market. So there are index-based funds also. Right? Based on the indexes, for example, let's say this Nifty includes 2% of stock value of Infosys, 5% of stock value of TCS, 10% of stock value of Reliance, etc. So by doing all this calculation, the index has been formulated. There are some index-based funds which include this percentage of stocks, right? And they also allow us to invest index-based funds. Got it? So Nifty index-based funds, there are Sensex index-based funds. Whatever the proportionality of the stock value has been considered to calculate the index, that amount of proportionality of stock will be invested in the index funds. So, in short, if Indian government bonds are included in the global bond indices, again, just like Nifty, this global bond indices include the sovereign bonds. That means the bonds which are backed by the governments, right? So those bonds values are indexed together to form global bond index. So let's say if the global bond index is how it is calculated? For example, let's say to come up with the global bond index value, they may include 10% of US government treasury bills, or it's a treasury bills, 5% of, let's say, the bonds issued by European Parliament. Similarly, there can be a 6% of value of the bonds issued by Chinese central bank, etc. So by adding all this, they will come up with an index. That means what? This global bond indices, right, will help us to understand the value of these topmost government bonds, right? By including Indian government bond into global bond indices, first thing, it will help us to achieve more visibility. Second thing, it will attract funds to Indian, bond market or Indian government bonds, right? First thing is, it will help us to create more visibility to the Indian government bonds. If there is more visibility in Indian government bonds, means what? Our INR will get more visibility, right? Also, it will attract money into our government bonds. So there are efforts have been put in to introduce or push Indian government bonds into global bond indices, right? So it will attract global institutional investors. So those who invest in global bond indices, if Indian bond are also included in the global bond indices, right, in turn they have to invest in Indian government bonds also, right? So who will invest in government bonds? Only institutional investors. That is for long-term investment. For example, pension funds, sovereign wealth funds, insurance funds. So those institutional investors, they tend to invest in global bond indices. So if Indian government bond is also included in there, it will increase more visibility. Also, it will attract long-term investments from institutional investors. Are you getting it? So again, all these measures we have taken, what are the significance? It will enhance India's financial sovereignty. These keywords are very important, my dear students. Financial sovereignty, because USA, time and again, it is known to behave like anarchist, right? Because it imposes sanctions, it will block the trades, right? It also brings in more and more protectionist measures. For example, recently, when there was news about BRICS countries are about to launch their own currency, Trump threatened countries like India, China, Russia, whoever involved in BRICS, that he would impose 100% tariff on India's exports, right? So that kind of attitude will be threatening for India's financial sovereignty. We do not have to rely on foreign currency or foreign financial decisions. That is why it is very important to achieve financial sovereignty. That is the reason we have to go for internationalization of rupee. Second thing is protect businesses from currency volatility. The value may come down or go up, right? How the currency value comes down or go up, it doesn't necessarily only depend on market forces. It may also depend on foreign policies. Let's say the federal bank increases the interest rate. It will automatically start creating demand for USD. Suddenly the value of USD will go high, right? That is dangerous for those people who involved in foreign trade. So we have to give them some stability in the forex value. That is why it reduces the currency volatility. It strengthens India's geopolitical position in global trade and finance. India becomes a strong player in global economics. It also supports long-term vision of making INR a global trading and reserve currency. Making India a global trading and reserve currency means what? It is nothing but internationalization of INR or Indian rupee, right? So these are few measures regarding internationalization of INR. It's a big topic, right? So if you want more information regarding that, let me know in the comment section. I'll be happy to record one more video only specific to internationalization of rupee as well as de-dollarization.